U.S. realities.
The United States is widely recognized as the world's largest economy, with official figures reporting a gross domestic product of over $25 trillion. However, beneath this massive and transparent economy lies a shadowy parallel system, an untaxed, unregulated, and largely invisible economy that experts estimate could be worth as much as $3 trillion. This shadow economy operates beyond the eyes of regulators and the IRS, encompassing everything from unreported income and under-the-table work to offshore assets and digital transactions that escape standard monitoring. While often overlooked in mainstream discussions, its implications are massive, affecting public revenue, economic policy, and even the social contract between citizens and government institutions. The shadow economy is fueled by multiple factors. At the individual level, people often resort to cash transactions, freelance work, or informal gigs to avoid taxation or bureaucratic hurdles. Small business owners may underreport earnings or overstate expenses to minimize their tax burden, while others engage in online trade or gig work that slips through conventional oversight mechanisms. The digital revolution has further amplified these practices. Cryptocurrencies, peer-to-peer marketplaces, and decentralized finance platforms create avenues for value exchange that are difficult to trace or regulate. Corporations and wealthy individuals also play a significant role in sustaining this shadow economy. Through complex tax shelters, offshore accounts, and legal loopholes, trillions of dollars can remain untaxed. While these strategies are often legally framed, they exploit gaps in the tax system, resulting in significant revenue losses for the government. According to estimates from economists and think tanks, the United States loses hundreds of billions annually in potential tax revenue, which could otherwise fund healthcare, education, infrastructure, and social programs. One of the most visible manifestations of this shadow economy is the informal labor market. Millions of workers, ranging from domestic helpers and gig economy freelancers to day laborers, operate entirely off the books. These individuals often lack access to health insurance, Social Security, or workers' protections, making them vulnerable to exploitation. At the same time, their income contributes to the larger economic ecosystem through spending on goods and services, creating a paradox. They support the economy while remaining invisible to formal fiscal oversight. Another layer of the shadow economy exists in digital and online spaces. Platforms facilitating peer-to-peer transactions, freelance services, and digital goods operate with minimal oversight. While these systems provide flexibility and economic opportunity, they also bypass traditional financial reporting and taxation, creating a parallel economy that is difficult to monitor. Cryptocurrency transactions in particular add complexity. While they offer security and privacy, they can also facilitate anonymous transfers that escape governmental tracking. Government efforts to quantify and regulate this hidden economy face immense challenges. By its very nature, the shadow economy resists formal measurement. Estimates rely on indirect indicators such as discrepancies between income and consumption, tax audits, or macroeconomic modeling, all of which have inherent uncertainties. The fluidity of digital assets, globalization, and innovative financial instruments further complicate the task, allowing vast sums to remain effectively untaxed. The existence of this shadow economy has broader societal consequences. Beyond the fiscal losses, it creates disparities in fairness and trust. Citizens who comply with tax obligations may feel frustration or resentment when they perceive others avoiding their responsibilities, potentially eroding social cohesion. Moreover, the untaxed wealth can concentrate in the hands of a few, exacerbating economic inequality and fueling debates over wealth distribution, corporate responsibility, and government accountability. In the next part, we will explore the mechanisms governments use to counteract shadow economies, the role of technology and international cooperation, and the potential consequences if this $3 trillion sector continues to operate unchecked. We will also discuss what this means for ordinary citizens, businesses, and the future of taxation in the United States. Governments have long grappled with the challenge of shadow economies, and the United States is no exception. Efforts to regulate, monitor, and tax untaxed income involve a combination of legislation, enforcement, and innovative technology. One key approach is enhancing transparency in financial transactions. The IRS, for example, increasingly relies on data analytics to detect anomalies in reported income, cross-checking banking activity, property transactions, and business filings. By identifying patterns that suggest underreporting or hidden assets, authorities can more effectively target audits and enforcement actions. International cooperation is another crucial component. Wealthy individuals and corporations often move assets offshore to exploit lower tax jurisdictions, creating a complex web of international finance. Governments and multinational organizations have responded with treaties, information sharing agreements, and initiatives like the OECD's Common Reporting Standard, which facilitates the exchange of financial data between countries. Such measures aim to reduce the ability to hide income abroad and ensure that taxes owed are properly collected. Technology both challenges and aids these efforts. On one hand, digital currencies, encrypted communications, and decentralized platforms complicate enforcement by enabling anonymous and borderless transactions. On the other hand, blockchain analysis, AI-driven auditing, and big data tools allow regulators to detect patterns of suspicious activity that would be impossible to observe manually. This ongoing technological arms race reflects the evolving nature of the shadow economy itself. The shadow economy also intersects with broader social and economic trends. Economic inequality, high tax burdens, and regulatory complexity can incentivize individuals and businesses to participate in untaxed markets. Conversely, reforms that simplify tax compliance, reduce excessive bureaucracy, and promote fairness can shrink the shadow economy over time. Public perception is equally important. When people perceive the system as equitable, they are more likely to comply voluntarily. For ordinary citizens, understanding the shadow economy matters. It affects public goods and services, as untaxed wealth limits government revenue for healthcare, education, infrastructure, and social programs. It also influences the competitive landscape for businesses. Companies that comply with tax laws face higher costs relative to those that evade or minimize taxes, potentially creating unfair advantages and distorting market behavior. Despite its challenges, the shadow economy also has nuanced implications. It provides economic flexibility and informal employment opportunities for individuals who might otherwise struggle to find work. Many gig economy workers, freelancers, and small entrepreneurs rely on informal income sources to sustain themselves, particularly in times of economic uncertainty. Balancing regulation with support for these participants remains a key policy question. The $3 trillion untaxed sector of the U.S. economy is not a monolith. It is a complex, multifaceted system with roots in historical, economic, and technological factors. Addressing it requires a combination of targeted enforcement, international collaboration, technology adoption, and reforms that incentivize compliance without stifling legitimate economic activity. Its size and influence underscore the importance of transparency, accountability, and informed policymaking in shaping a fairer economic system. As you reflect on this, consider the broader implications. How does the shadow economy affect society, governance, and your own financial ecosystem? Are there ways to support fairness and compliance while respecting economic freedom? Let us know your thoughts in the comments. And if you found this video insightful, don't forget to subscribe for more in-depth analysis of economics, finance, and hidden global systems.